Business Studies A-Level Organization. In not more than 5 minutes, we're going to cover company. You remember the scenario that we took last time? Your dad and the others have created a partnership. Well, you've gone abroad to study business management and your parents have been sending you funds regularly to finance your studies. You come home to discover that the partnership is now running 10 pizza shops and they are employing 30 people. In fact, your dad is now the general manager and also the operation manager. And Tikale is the financial and HR manager. Billy Boy, previously known as Billy Boy, is now known as Mr. William. He's the logistic manager. Things have developed very quickly. The partners are now shareholders. They have registered the company with the Registrar of Companies under the name of Pizza Daddy Limited, Ltd. They have written a memorandum of association where they detail the name of the company, the objectives of the company, the capital of the company. They've also written an article of association where they've explained the internal rules of the company, for instance, the rights of each shareholder, the types of shares, the number of shares. While discussing with the shareholders, we realize that they have a big dream. They would like to go national. But unfortunately, they need more finances. And you tell them that they can go national if they float, or if they go public, or if they are listed on the stock exchange. They are fascinated. Especially when you tell them that if Pizza Daddy goes public, then it will be called Pizza Daddy Public Limited Company and will be listed on the stock exchange, where the shares will be advertised to the general public. And Pizza Daddy PLC will also have a better public coverage. However, you told them that they have to be cautious, because whenever a firm goes public, it will have more costs. For instance, solicitors, stockbrokers, or accounting costs. You also told them that whenever a firm goes public, it runs the risk to be taken over by external bidders. You also told them that whenever a firm goes public, it has to comply with a strict regulation, namely the Sarbanes-Oxley Act, and also to comply with the Cadbury Code of Best Practice. The shareholders are now a bit more cautious and they mandate you to provide them with some criteria so that they can make a better decision. You find yourself as a consultant while answering a typical A-level exam question. The first criteria that you can provide them with will be, is Pizza Daddy Limited ready to afford the cost? Secondly, is Pizza Daddy Limited ready to share ownership with other shareholders? Also, is Pizza Daddy Limited something like ready to comply with strict regulations? Best of luck.